Welcome back to Teshkid FX for another price prediction update, and in this video I'll be giving you a price prediction update on Polygon Matic, whose current price stands at the $0.8997 mark, and here on TradingView the market is down by 1.18%. and in this video I want to give you the short-term and the long-term scenarios that I'm expecting to play out, basing my analysis on the Elliot structures and the Fibonacci's. And allow me to kickstart the video here on the daily chart by giving you a brief of what has been happening here on the Polygon Matic chart. So Polygon Matic, from these low prices that we had been trading within, we saw a very nice bounce to the upside, making it to an all-time high at around the $2.9 mark in a movement that I'm terming as a higher Elliott wave count 1 to the upside. And after seeing the all-time high, we had been seeing no prices in this massive ABC corrective structure, which took us back to around the $0.32 mark in a movement that I'm terming as a higher Elliott wave count 2. And after seeing the low for that higher Elliott wave count 2, whatever we expect next is a bounce to the upside in the formation of a higher Elliott wave count 3 before we see a wave 4, and then continue pushing even higher in the formation of that wave 5. And there are chances that we might have seen the low for this higher Elliott wave count 2, and very soon I'm expecting a very nice bounce to the upside in the formation of this wave 3, which is an impulsive wave. And because of its impulsive nature, we also expect to see fractal waves in formation within that wave 3 to the upside, and sketching out a minimum target area to the upside in the formation of this wave 3 by connecting the trend-based Fibonacci from the low of the first wave to the high of that wave 1, then dragging the fibs to the low of the second wave, and that gives me a minimum target area to the upside in the formation of that wave 3 at the fib level 1.618, which perfectly lies at around the $5.0133 mark. And that is the minimum that I would expect that wave 3 to the upside to do before we see a wave 4, then continue pushing even higher in the formation of that wave 5. And that is my long-term scenario that I'm expecting to play out here on the Polygon Matic chart. And jumping to the 4-hour chart for further analysis, here on the 4-hour chart, you can see I have this Elliott wave structure in blue, which represents the impulsive nature that we expect in the formation of that wave 3, and this is a fractal wave within the formation of that high Elliott wave count 3. And getting a little bit into the details of the formation of this Elliott wave structure, I believe we have completed the formation of that wave 1 to the upside of this Elliott wave structure, that is this fractal wave to the upside, and that is after seeing this Elliott wave structure in yellow, which is over here, representing the impulsive nature that we expect in the formation of a higher Elliott wave count 1, and the wave 5 completed the formation of that wave 1, making a high at around the $1.3 mark. And after seeing that high, we have been seeing no prices in what I'm terming as a higher Elliott wave count 2. And because a wave 2 is a corrective wave, we also expect to see an ABC corrective structure in the formation within the formation of that higher Elliott wave count 2. And there are two ways we can have that ABC corrective structure, and that is what is going to give me my short-term scenarios that I'm expecting to play out here on the Polygon Matic chart. And my first form of that ABC corrective structure that is giving me my first possible scenario, we can have that ABC corrective structure having this as a massive wave A. Then I'm expecting a bit of a bounce to the upside in the formation of that wave B. Then we continue pushing even lower in the formation of that wave C to fully maximize the formation of this second wave, and sketching out a minimum target area to the upside in the formation of this wave B using the trend-based Fibonacci, connecting it from the high of that wave A to the low of this wave A down here. That gives me a minimum retracement area to the upside in the formation of this wave B between the fib level 0.618 and the fib level 0.5, and I can mark that target area here on the charts, which perfectly lies between the $1.02 mark and the $1.09 mark. And for that wave B to play out, we need to manage to break above the key area of resistance at around the $0.95 mark. And before we see a breakout above that key area of resistance, we also need to manage to break out of this channel that we have been trading within to the upper side. And once you see a retest of the key area of resistance at around the $0.95 mark, then we can continue pushing even higher to fully maximize this red target area in the formation of that wave B. Then from there we can expect an impulsive movement to the lower side in the formation of that wave C to fully maximize the formation of that second wave. And this is the first possible way we can have this ABC corrective structure in formation of that higher Elliott wave count 2, and the other possible scenario can only happen in case we lose key areas on the Fibonacci's here. And if I use the Fibonacci's to give you those target areas, connecting the fibs from the low down there to the high that we made at around the $0.94 mark, that gives me a minimum target area between the 0.382 fib level and the fib level 0.618, and I can mark that target area here on the charts, which perfectly lies between the $0.88 mark and the $0.84 mark. In case we continue seeing lower prices manage to break out of this channel to the lower side and get into this red target area down here, the moment we lose this target area, then the other possible scenario will be playing out. But unless we continue holding above the fib level 0.382 and the fib level 0.618, then there are chances of continuing to push higher, manage to break above the key area of resistance at around the $0.95 mark, and then fully maximize the formation of that wave B. And in case that doesn't happen and we lose the target area between the $0.88 mark and the $0.83 mark, then the other ABC corrective structure will be playing out. And I can first remove this one over here and give you the second possible scenario. And the other way to have that ABC corrective structure is having this as the wave A. Then we saw a wave B making a high at around the $1.17 mark. Then in case we lose this target area, then I'll be expecting a straight sell off over here in the formation of that wave C to fully maximize the formation of that second wave. And there are chances of seeing such a scenario because in case tomorrow when we have the FOMC meeting, that is tomorrow, in case there is a negative impact on the market and we see a negative impact on the market, then there are chances of seeing a straight sell off over here, lose that target area, lose the key area of support at around the $0.78 mark, and continue pushing even lower in the formation of this wave C to fully maximize the formation of that wave 2. Also taking a look at the indicators here on the RSI, we are trading at around the 49 mark, meaning we have massive room for us to support any movements to the upside and also to the lower side. Also taking a look at the MACD, here on the MACD we have printed a bullish cross, and that would mean higher prices are coming our way. So there are chances of managing to break above the key area of resistance at around the $0.95 mark, fully maximize this right target area in the formation of that wave B. Then from there we can expect an impulsive movement to the lower side in the formation of that wave C to fully maximize the formation of that second wave. So that is the update for Polygon Matic, and I'll keep you updated.